All right, morning everyone. Sorry about the terribly late start this morning. Email issues. Fired up. Okay. Exciting night out of the U.S. markets. Finally have a proper correction. In fact, statistic for you. First night in 2 years that the S&P has finished down over 1% and closed on its lows. So the last time that happened was the beginning of 2013. I think that's an interesting statistic. Just shows you kind of the state of the markets that we've been in, but it also shows you, I think, the how the market's positioned, the fact that we closed on the lows like that. You can see that last bar there, definitely bearish. So something to take with you. We did see the oil price come off yesterday. We saw light sweet settle all the way down at about 48 and a half. We saw Brent crude, which also traded down significantly, we're trading around 56.70 at the moment, and that spread has started to narrow. We talked about that yesterday, and we talked about the reasons for that. Goldman Sachs keeping a short-term target on light sweet at $40. So I think that that's also significant, and you can kind of feel right now the contango is starting to go out of the market. So the forward months on oil are the spread between the front month and the forward months on the oil price is actually starting to narrow now, which essentially I think is starting to tell us that that there's so much supply that's coming on that's already being sold into the forward markets that you're starting to narrow that gap. That's, in my mind, I think that's bearish for the outlook for the oil price. And just keep that in mind in anything that you're trading that's attached to oil. It's starting to look like we're going to get lower for longer. So do what you want with that. The Asian markets overnight were surprisingly very resilient. As you can see there, Shanghai does the opposite every day. The Nikkei traded well and traded up on the back, obviously probably because of the weaker yen. But considering what happened in U.S. markets, I still think it's a very good result out of the Nikkei. Hang Seng and Aussie down a little bit, but the miners taking a real pounding in Australia, down 5% in Billiton. Across the board, all the mining stocks getting hammered. But in London, we saw that same sort of move. So we saw Billiton down 4.7%, Anglo's down 5%, Glencore down 3.2%. So across the board, we did take a beating yesterday in the miners. So I think a lot of that's priced in. I don't know if it's totally priced in, but definitely to an extent, somewhat priced in. All right, a chart of interest show this morning commercial crude oil inventories in the U.S. ballooning out of control. This is just kind of adding fuel to the fire and talking about. I mean, this says that Credit Suisse to warn last week the U.S. is approaching super contango, but it doesn't really make sense with what's going on in terms of the contango starting to move away. I think essentially they're saying if there's no room to store the oil, then that can create a problem for people being able to actually buy it now. But you're going to start to see the price of the front month start to fall because they're not going to take that supply out that's not being used, if you know what I'm saying. So anyway, definitely bearish for oil prices. Just another support to that. I wanted to show you guys another chart as well. One of the ones that I thought probably should have made the cut for chart of the day is the spread between the U.S. 10-year and the German 10-year. Again, yesterday hit a record. So U.S. 10-year yields are at 190 basis points above German 10-year yields, which is quite incredible. I mean, when you think about that and what it means, just anybody who, I mean, you can see people paying premiums for German yields, but I mean, the rest of the space over there, Portugal and Spain and the likes, still trading around 1% or even slightly south of 1%. Those yields being below U.S. Treasuries, regardless of what the interest rate outlook is, it's just it's somewhat unsustainable, I think, and I think that's going to end up creating some real headaches for people and some real excitement in financial markets with the volatility that'll come from that. All right, we've got RMB, which is supposed to come out with earnings at the open this morning. We're looking for a full year. This is only half year numbers. We're looking for full year numbers. The estimates are for on the earnings per share up 1.5% to 491. Revenues looking to be up 9.4 to 702, and divi per share at 112. All right, if we look at market data this morning, we've got Westpac, or the Australian consumer confidence numbers which came out. They were definitely softer. I mean, I don't understand how the Australian stock market's actually even holding up as well as it is, maybe simply because of a weaker Aussie dollar, but managing to kind of hang in there. We had Japanese PPI, which came out higher than expected. Machine orders came out better than expected. Australian home loans softer than expected. I think that that's a real problem for Australia. I personally think that there's big issues coming there in the housing market. The prices of houses there relative to the average salary earned are almost 60% higher than what they were at the peak in the U.S. boom. Industrial production coming out in the UK today. We've got manufacturing production out in the UK. Mortgage apps in the States, crude oil inventories every day for whatever reason. Even when the crude oil inventories come out and they're higher than expected, the oil price has been rallying. So I don't know, whatever that means. Just keep an eye on that one today. Monthly budget statement as well out of the States. All right, let's get into the maps. Okay, the prevailing chart of the I think the day. Well, I'll get into that in a second. First, we'll look at the S&P. So S&P yesterday came down, and I think we dropped some sort of critical support on spot at 2065. We'd already a couple sessions ago, we dropped the highs from 2014, which I also think was important. Now we're dropping some critical support here at 2065. Our 50-day moving average as well, we've dropped, which kind of came in line with support there. So I think it adds a little bit of further significance to that sort of level. At the moment, I kind of feel like we're going to have to come down and test 2,000 to really find any support. I just don't see anything in the near term, somewhere around 2,000 and that 200-day moving average, in order for us to really find any sort of support. All right, let's look at the Aussie one-year chart as well, or daily chart. We're gonna same sort of support level, or the chart looks relatively similar with this little support level down here. We haven't gotten down to it, and definitely haven't dropped it. I think that this level is important. We talked about this when we were on the way up. This level's at 45,050. When we broke out through it to the upside, we talked about it. We talked about the significance of it. Definitely looking like we're going to come down to test it. You can see yesterday there was definitely a little bit of a head and shoulder that we dropped out of in the Aussie, showing us targets down to around 46,000. We did get down to that number. So, I don't know how much lower we've got, but we definitely dropped the neckline of that. I think we've already reached the target of the head and shoulders. But either way, I still think that we could see a significantly more correction out of the Aussie, especially if we can see the rand just start to hold up a little bit. We could follow some of these other markets down a little bit, down 45,550. Definitely some sort of support, and I think that we've got to watch this level very closely, because if we drop that, then I think you could really start to fall hard. But until then, that's going to be the main level of support we're going to look for. Right, we'll look at Fushini. So what I was saying, I just showed you one head and shoulder that we dropped out of on the Aussie yesterday. There's a hell of a lot of head and shoulders going on in our market. I just started noticing them yesterday afternoon all over the show. Fushini is one of them. This thing is just kind of the best trading stock on the board yesterday afternoon at one point, but we did trade back down to about 67.5 on the close. You can see here definitely a neckline around 162. If we were to drop 162 here, this thing would most likely come back and correct all the way down here to about 146 or 147, which would be our target to kind of fill that gap. So that to me is a very, very big level at 162 in Fushini. Obviously the weak rand I think will hurt these guys. You got to think that it's going to hurt the entire retail space. You got to think that what our 10-year yields are doing right now could potentially put pressure on and the rand weakness and everything like that could even start to put pressure on them to hike if we continue to see weakness like this in the rand and rates moving higher. All right, look at Remgro here. Remgro also making a head and shoulder, dropping out of from the neckline. This one, none of them are exceptionally clean. None of them are over longer periods of time. So these are more short-term targets, I would say, out of all these stocks. But nonetheless, the patterns are there. Definitely a little bit of a head and shoulder setup here. I think dropped the neckline around 269 yesterday, and that'll give us a target of about 15 Rand to the downside, which should put us down at 254. So same sort of thing, maybe coming in to to fill the gap here in Remgro, somewhere around these levels, which is really where the closes were, 257, something like that. That I could easily see playing out. So when you look at the Aussie, definitely dropping. I mean, it's kind of reached most of its target on that short-term head and shoulder, but a lot of these charts, a lot of the main stock charts here are still showing that they've got lower to go. So it also could be bearish for the index. You can see the same thing. This is Barlow here. Same sort of thing, dropping out of another head and shoulder pattern as of yesterday. Obviously, this one's probably the best looking of all the charts. Let's just have a look at what the target is from about 94 and a half, dropping, call it, so 6 Rand when we drop from 88 bucks, which would give us a target of about 82. So yeah, maybe making some new lows coming in Barlow. And like we said, we looked at this chart not that long ago when we talked about it, made a nice reversal off of what was support, what was resistance is the 5-year chart when we dropped, when we failed here. That I think was very bearish at failing out of this flag. It's really panned out into a nice head and shoulder pattern and giving us some lower targets now down to around 81 bucks. All right, the last one I'm going to show is another retailer, Mr. Price. Mr. Price looking maybe a little bit double top-ish here at the moment. It's not the gap from highs to lows here to me isn't looking enough to really kind of give it a nice double top on the chart, but there's definitely some major support around here, around the levels that it's closed. I think you can actually run this all the way across, something like that, and give us real support levels down here around 248. We got there intraday yesterday and managed to hold. There's definitely some support around here as well at the bottom of this little sideways consolidation we've seen around 252. We also managed to close above that. So somewhere between 248 and 252. If you're looking to buy this thing on a pullback, maybe a decent little area to nibble. But if we drop 248, then I think it could be there could be some more correction coming there in Mr. Price. That's it for today, guys. Good luck out there.